Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, we're in the Santa Claus rally part of the year, right? We had a down day yesterday, but maybe we get that Santa Claus rally up until the end of the year. But I'm keeping a close eye on NVIDIA. You see, NVIDIA has led the market higher. It's the AI stock, the darling of the stock market, as you will, and it's led the market up this year, right? Now, NVIDIA is having trouble now, though. It's dropped below the 20-day, dropped below the 50-day, and it's headed down towards the 200-day. Now, if it doesn't rebound soon and start making a new high, there's no way that the market's going to advance. The market's going to start to come down. It's going to come in. It's going to have a correction. Now, my call is the correction is probably going to be 15 to 20%. Now, maybe after that correction, we'll bounce back up and make another high. But eventually this market is not going to make new highs and it's going to come down. And that's just my take. Now, we've had we had the jobs numbers come out, right? The unemployment claims. That was shocking that the unemployment claims did jump up higher, right? Did jump up. And I'm telling you, unemployment is going to spike up this next year. 2025, unemployment's going to spike up. Why? Well, first of all, we're laying off all those government workers, right? The Doge boys, they're going to get after it. They're going to cut whole departments. We may lay off half the government workers. Now, I don't know how many that is, but I know it's it's millions and millions. I think it's close to 20 million government workers. Lay off half, that's 10 million unemployed right there. That's just part of it. That's just the public sector. You get to the private sector, you're going to have a lot more layoffs also. Now, we had the wholesale inflation number come out. Now, this is fascinating to me and very fascinating, right? We had this wholesale inflation number come out, and it's 0.4%, month over month, 0.4%. Now, you multiply that out by a year, right? Multiply 0.4% times 12. You got basically 5% inflation right now, according to the government numbers, when they take out food and energy, right? They don't count those things. But you got a 5% inflation print right now going on with the government. Okay, so inflation's not dead. Inflation's not coming down to 2%. It's not even going to stay down at 3%. It's jumping back up. Right now it's at 5%, right? I mean, that's their numbers. My numbers, it's closer to 10%. But by their own numbers, 5%. Now, here's the thing. Okay, so now the Fed, when asked about this, right? Chairman Powell asked about this. It's all part of the plan. Part of the plan, right? Part of the plan to wipe out the poor people. Part of the plan to destroy the middle class. You are part of the plan, right? Well, it's transitory, right? Inflation's transitory. It hasn't gone away yet, but it's transitory about 2 years ago, but it's still here. And now their print is 5% for 1 year, right? 5% a year is where we're at. I say we're closer to 10, but look so you got inflation numbers not going down. They're heading up higher, right? You got the stock market pretty much at record highs, right? But yet they're going to cut interest rates. Why? Why are they going to cut interest rates? What are they seeing? They're saying that we're headed into a depression. We're in a recession right now, but we're going to be headed into a depression. When you get these job losses, all of these job cuts in the private sector, in the public sector, you're going to be pushing the economy into a depression. So they're going to have to lower the interest rates, right? And that's what they're going to do. They're going to have an interest rate cut at, I think it's next week, isn't it? Okay, so we're going to cut it again, right? We cut it 50 basis points, we cut it 25 basis points, probably just another 25 basis point cut until we do an emergency where things get really bad. Then they'll come in and just start slashing it back to zero as close as they can. They have to do that because the government can't pay their bills. The banks are going to be falling over one after another. Now, once again, this is just my take. A lot of people think everything's great. Everything's great in the economy. I was listening to this one podcast. I love economists, right? Because you got the Keynesian economists. They're a lot different than us Austrian economists, right? So Keynesian, they kind of tinker with everything, and they're pretty much in favor of the Fed, saying what a great job the Fed's doing keeping the economy rolling around. Well, what the great job the Fed is doing is keeping the rich people rich and the poor people making them their slaves, basically. That's what the Fed is good at doing, right? But you see what's happening is we got a problem. We got a big problem right now, okay? We got a problem. The Fed has to cut rates, but inflation's going like this. is, but they have to cut. Inflation's going like this. So we're waving the white flag on inflation. Inflation's going to take off. Okay, so that's fine. But this guy's telling me, right, in this podcast, getting back to that, he's a Keynesian economist saying the Fed's doing a great job, right? And he's saying that this debt bubble, it doesn't matter. Doesn't matter. He thinks everything's doing great. Everything's rosy, sunshine. Everything's going to be fine. 36 trillion, 37 trillion, 50 trillion. Doesn't matter. 100 trillion. He's saying that doesn't matter. Why is he saying that? He's saying, well, that the government, yeah, they got all that debt, but that's someone else's asset, right? Because they're paying out all that interest. It's like giving stimulus to the economy. Well, why don't we just keep printing money and get it to 200 trillion, or let's get to a quadrillion and pay off all of our unfunded liabilities if it's such a good thing. No, believe me, at some point the debt does matter. And I can tell you right now, we're getting really close to that point. Why do I say we're close to that point right now? Well, you think about when they're lowering the interest rates, right? What's the long end of the curve doing? It's going higher and higher and higher. Why? Because it smells the inflation. It can smell the inflation, and it's not going to give you money at 3, 4, 5% when inflation's running 8, 9, 10%. It's going to want to get up to that number. So the high end is going to go past 10%, in my opinion. Mortgages will be up around 12 or 14%. Now, of course, people think that's not going to affect the housing market. You just wait to see the mortgage rate up at 12 and 14%, that the housing market's going to be coming down really hard, going to be coming down really fast. Why? Because no one can afford to buy your house right now at the price it is at 7%. They surely can't afford it at 10 or 12%. But as the Fed keeps cutting these rates, inflation keeps jumping. And that's where the long end of the curve, which the Fed does not control, controlled by the marketplace, that's going to continue higher. Now, this guy I'm listening to on his podcast, right, he's saying that it's impossible to have a bear market ever again, right? We've been in this 16-year bull market, which is fabulous. It's incredible. I didn't think they could push it this far, but they did print $30 trillion to get it this far. They've enriched their friends. All if you're wealthy, if you got assets, you're doing really well. It's a great economy for you. If you're poor, if you're living paycheck to paycheck, well, you're pretty much starving. You don't know how you're going to afford food. You don't know how you're going to put gas in your car. You don't know exactly how you're going to pay your energy bill, your electric bill, your mortgage, your rent. You can't pay all that because you're living paycheck to paycheck. You don't have the assets. Yes, the assets are inflating right now. But when this bubble breaks, when the debt bubble breaks, all those assets are going to come down. That's why we have to go until it blows, right? Okay, so we're just going to keep going. Now you see, it's like the private credit cards. Okay, private credit cards are at a record high. They're hitting a record high every month. Every month it's a new record high for people with credit cards. Why? Because they've blown through their savings. They don't have savings anymore. They don't have any way to survive except for their credit card. So they have to go buy groceries on their credit card. They have to go pay their rent on their credit card. Everything's going onto their credit card, and the credit card's going up and up and up. And it's at 25% interest rates. 25%. At some point, this is going to blow for the individual. He's not going to be able to get any more credit, you see. But the government, our government, this is their mentality also. Go until it blows. Just keep borrowing. Now, you see the credit card delinquencies, they're going up and up and up and up, right? Delinquencies. The people are doing the same thing our government's doing. They're borrowing on these credit cards. Every time the bank sends them a new credit card, they accept it, right? Because they have no intention of paying off these credit cards. No intention. It's impossible for them to pay off. Just like our government did. Our government sets the perfect example. It's impossible for our government to ever pay off the debt. So they have to keep going until it blows. I guess it's to say, YOLO, right? You only live once. Well, you keep going. It's going to be you only live outside because you're not going to be able to afford rent. You're not going to be able to afford your mortgage. You're not going to be able to live indoors. You're going to have to make a choice. You're going to have to choose between food or living inside. I have friends like that right now. They have jobs, but they can't afford to live inside if they want to eat. You see, they have to make a choice because they're in trouble. They're in financial trouble. They don't have the assets that are going up. Yes, for me and a lot of wealthy people, we're doing really well. Look at gold up 40%. 5% for the year, outperforming the stock market again. Why? Because they're just printing money. You see, gold, as it goes up, it's a sign that the dollar is going away. The dollar has zero purchasing power, right? Has no purchasing power. The only thing it has left is that some people still have confidence in the dollar, right? So they keep accepting the dollar. Eventually, that confidence is going to go away. When you get inflation going higher and higher, what's going to happen? It's going to happen that we're going to hit that hyperinflation slowly, 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 then all at once, right? That becomes the hyperinflation. That's where the confidence goes away completely in the dollar, right? So the dollar becomes completely worthless. Any assets that are priced in the dollar, I don't know what you're going to do. You're going to trade it for worthless dollars, right? Okay, well, that's a possibility. So maybe the stock market can double from here in nominal terms. But compared to real money, compared to gold, compared to silver, stock market's coming down. Your house is coming down. Everything is coming down, right? Because gold and silver are continuing to outpace everything. Just not that they're going up. It's the dollar going away with the printing of money, right? But the mentality is to go until it blows. And that's what our government's doing, right? Because the debt doesn't matter. That's what this economist is telling me. You see, he's a Keynesian economist, but what we're doing is we're transferring from this failed Keynesian experiment that we had called America. It's failed. We got $36 trillion in debt. It's going to blow up. It's failed. And we're going to switch to Austrian-based economics where it's a market adjusted. The free market will let it flow, right? Free market will adjust prices. Prices will come down on all financial assets. I believe that they will come down, right? Your house will come down. The stock market will come down. When the debt bubble blows. Up until then, they can keep printing the money. But once the debt bubble blows, that's where it's all over and it all comes crumbling down, right? So you can keep printing the money, keep the assets inflated, but at some point the debt bubble pops and then everything comes down. But it's the go until it blows mentality. That's what you have to think. But we're switching to Keynesian economics, which is price adjusted free markets, and we're going to get to sound money. That's what Keynesian economics is based upon, sound money, gold and silver, God's money. Now, I know everybody out there is going, but Mike, we got Bitcoin. Look I'll take God's money made by God over something made by man. I'll take God's money anytime. You keep staying with your Bitcoin, and right now you're party dancing, man. It's at 100,000. Michael Saylor's telling you it's going to 30 million, and he knows because he's a genius, right? Maybe he is. So far he is, right? His stock keeps going up. He's got everything right. But you see, the credit card problem is worse than I even talk about. Delinquencies are up. Credit card record high. Interest rates on credit cards 25%, but it's worse than that. It's worse than that. You got these new companies started, right? These buy now, pay, well, pay never, but buy now, pay later is what they're called. But people are paying never because all their credit cards are maxed out. They can't get a new credit card, right? So what they do is they go and they get this buy now, pay later program, right? So they're in the buy now, pay later program, and that is basically over 30% interest if they ever were to pay it off. But they're not going to pay it off. They have no intention. They have no way to pay it off. Look, they're in debt way beyond their means, and they cannot get out of it, just like the federal government. In debt and no way out. We're going to YOLO. We're going to only live once, right? We're just going to go until this debt bubble breaks. And the debt bubble will break, and it'll bring everything down with it. And the problem is it's going to bring down the pensions, going to bring down the retirement system. You're not going to have any Social Security. Yeah, they'll pay you. It just won't be worth anything. The pensions will be crumbling along with everything else. So maybe you're expecting your pension, but you're going to get like what? The 30% of it, maybe 20% if you're lucky. If you're lucky, some people are going to be completely wiped out on their pension. California, CalPERS, right? What are they invested in? Private equity, about 20%. That's not liquid when this thing crumbles. There's going to be a bailout. They're going to need a bailout, but who's going to bail them out? The government's broke. We're not going to be able to bail everybody out. That's where the reset comes. That's where everything comes crashing. I don't mean to be so negative. I know that there's a lot of optimism out there right now. We got the Donald. He's going to solve all these problems. And I hope and pray he does. You know, the Donald, He's optimistic, right? He's got the Doge boys there. Everybody's going to come together, right? And I hope it works for him. I just think they're setting him up as a fall guy because this is going to crash. We don't have 3 years left. I'm telling you, we do not. We'll see how it plays out. But this is going to come tumbling down. They're going to try to blame him. They're going to try to blame capitalism. They're going to try to bring in socialism. I'm telling you, it's not going to work. Socialism has never worked. What we need is sound money. What we need is not Keynesian economics, Austrian economics, where we get free markets going. We don't have free markets in this country right now. People think we have free market capitalism. Not a chance, not a chance, nowhere close. We need free market capitalism. Let the markets be free. Look at it. If the markets were free, your house wouldn't be up here at $3 million, right? It'd be down around, I don't know, 400,000, something where people can afford to buy the houses again. Once the free markets take effect, there'll be a reset. Everything will come down, but then we can start to prosper from there. We can start to rebuild. If you like this stuff, give me a thumbs up. I'm Tall Mike. Punch the subscribe button. Get out there, everybody. Have a great day. Bye-bye now.